Yes, good evening. So let's continue with the illustration number 6. So in this question, they have given us all the variable costs, material, labor and overhead respectively. Thereafter, they are also given the selling price, which is 270, and the fixed cost and the sales value also they have given. But there is a small issue. The fixed cost, I believe it to be a mistake. There should have been 14 lakh instead of 14 lakh 40,000, which they have mentioned. So I have corrected there. The fixed cost we should take in the question as 14 lakh, and the sales value which they are given is 40 lakh 50,000. That is perfectly fine. Now, in the coming year, what they are saying is the direct wages will increase by 10% and direct material cost will increase by 75.5%, whereas variable overhead will increase by 5% and your fixed overhead is expected to increase by 3%. From the given information, their answer is to find out what will be the revised selling price if the current PV ratio is required to be maintained. Second part of the question, they are asking how many units I will have to sell the goods in the forthcoming year, so that to ensure that whatever is the current profit which I have earned is to be maintained. And also they are saying you can't change your selling price also. You have to maintain the selling price also. So these are the data which are given to us. Let us start the problem. Okay. To answer the first part of the question, let's proceed with finding out our PV ratio. So what is the formula for PV ratio? It is contribution by sales on 100. So let's start finding out our contribution and then we can apply PV ratio formula. So selling price is how much? 270. Variable cost is how much? They are given this material cost, it is 120. Labor cost, it is 30. Overhead, it is 12. So we are first finding out current year's my PV ratio. Then what is my contribution? It is 270 minus total of all these things. It will come to 108 per rate. Now, what is my PV ratio here? The 108 divided by 270 into 100. So it will come around to 40%. Proceeding further, let's try to proceed with the next part of the question. They are asking us to find out new selling price for the forthcoming year. Now, first, all my variable costs are increasing as mentioned in the question. So let us give the effect to that. My material cost currently it is 120. It will go up by 7.5%. So it will come to 129. Labor cost, it is 30 per rate. It will increase by 10%. So 30 plus 10%, it will be 33. Variable overhead, they are saying it will increase by 5%. So it will be 12 plus 5%, it will be 12.6. So what is my revised total variable cost? It will be 129 plus 33 plus 12.6. It will come to 174.6. Now, to proceed further, we need to apply a little bit of our brain. Currently, my PV ratio is 40%. Currently, my PV ratio is 40%. That means, what will be the share of variable cost? Out of the 100%, if the PV ratio is 40%, what will be the remaining? 60% is my variable cost ratio. Now, if I know my variable cost per unit is 174.6 and if I also know my variable cost ratio which is 60%, can't I straight away find out the sales value? It is nothing but 174.6 divided by 60%. So it will be your selling price to be maintained. It will come around to 291 rupees. So in this way, we have completed the first part of the question. Let's move into the second part of the question. For that, I need to find out first the current profit. So let's continue. I already have in my hand selling price is 270, variable cost is 162, which we have already computed. There is 120 plus 30 plus 12. So my contribution will be 108, which we have already computed. Now, number of units sold we need to calculate. How to calculate? In the first, after this material, labor and overhead, in that paragraph, after that paragraph, they have mentioned the total sales value to be 40 lakh 50,000. And 40 lakh 50,000 divided by selling price, which is 270, I will get my number of units. Now, total contribution in this case will be how much? 15,000 units into 108, which comes to 16 lakh 20,000. Apart from that, fixed cost, which I believe to be wrong, is if we are taking it as 14 lakh, I will get my current profit. It will be 16 lakh 20,000 minus 14 lakh. It will be 2 lakh 20,000. Now, in the forthcoming year, giving due respect to all the changes which they have mentioned, let's try to proceed. Now, profit to be earned, just now we have computed how much it is, 2,20,000. Now, what about the fixed cost? Fixed cost for the forthcoming year, we have to be very careful. Current fixed cost, which I assume there is a mistake in the question, to be 14 lakh, plus there will be increased by 3%. So, no, not 3%, if am I right? Yes, it will be increased by 3%. So 14 lakh into 3% will be 42,000. So total fixed cost will be 14 lakh 42,000. If that being the case, what is my desired contribution? It will be the desired profit plus my desired future fixed cost. So 2 lakh 20,000 plus 14 lakh plus 42,000. So desired contribution will be 16 lakh 62,000. Now, also I know that 16 lakh 60,000 means what? Sales minus variable cost. Now, sales means how much? Number of sales quantity units into selling price, number of sales quantity units into variable cost. Now, in this, I have the information regarding selling price and variable cost. So, please be careful. 270 I can take because they have mentioned you cannot change the selling price. So, 270 minus 270 into X I can do. Let me take at X the number of units. Variable cost, you have to be very careful. You should not take 162. 162 is current variable cost. Now my revised variable cost for the future will be 174.6, which I have already computed, giving due respect in the last slide. So 174.6 into X. Then the total should be, if I deduct 272 into X minus 174.6X should give me 16 lakh 62,000. Further simplifying it, I will get 95.4X is equal to 16 lakh 62,000. And then I will get units to be sold. It will be 17,420 units. With this, we have completed the question number 6. Let's move on to the next question, question number 7. Here, what are the details which are given? They are given the material cost is 10, conversion cost, which means what? Labor as well as overhead. The sum total of this, it comes to 5 rupees. They have also mentioned the dealer's margin is 3 per unit and selling price is 30. Now, fixed cost they have given, which is 3,50,000. Currently, the company is able to sell 60,000 units, and by selling 60,000 units, it means they are saying currently whatever is the total capacity of the to be manufactured, they are utilizing 75%. So, what could be our 100% capacity? 60,000 divided by 75%. So, it will come down to 80,000. Going further, they are saying there is a significant competition in the market. We need to put extra effort to hold on the current market into the current market. Then they have before them two suggestions before them to increase the sales. Either they have to compromise the selling price by 10% or they need to increase further dealer's margin, that is extra cost we need to incur by 25%. So current dealer's margin is 3 rupees. So 3 into 25%. So there should be an increase of 75 paisa of dealer's margin per unit. So which option is better and which one you will choose is what they are asking. And they are asking us to give us with the explanation also. So let's proceed with the answer. Now, capacity limit, I told you it is how much? 80,000. Next, they are saying profit earned at present cost. Let us find out profit earned at present. So given selling price is how much? 30. Let us write down all the variable costs: material, conversion cost, dealer's margin, one by one, which is given the question, first part of the question itself. And I will arrive at total variable cost will be 10 plus 5 plus 3, it will be 18. By that way, I can find out my sales minus variable cost contribution, which will be how much? 30 minus 18, it will be 12. Let's continue further. So I do have contribution as 12. Then present units. How much is present unit? It is given 60,000 units. So total contribution in this case will be 12 rupees into 60,000, 7,20,000. Given the fixed cost, it is 3,50,000. So what is my current profit? It will be 7,20,000 minus 3,50,000. It will be 3,70,000. Okay. Now, let's proceed with the options given before us. First option is what? If I'm compromising my selling price by 10%. So let us apply the desired profit and desired contribution formula. So desired sales is equal to desired profit plus fixed cost divided by contribution per unit. Now here I have written other way around, just the position has changed. So what is my desired profit? It is 3,70,000, and what is my fixed cost? It is 3,50,000 divided by contribution per unit. Here there is a small change. In the first option given to us, selling price is decreasing by 10%. So current selling price is 30. So 30 minus 10%. So revised selling price will fall down. Minus 18 rupees, my variable cost will remain intact. So what will happen? My contribution will fall down to 9 rupees. So 7,20,000 divided by 9. How I get 7,20,000? 3,70 plus 3,50,000. So I get my units is how much? 80,000. It means what? Please understand. You remember in the first part we have discussed that what is the capacity, maximum capacity? It is 80,000. And here we are getting the answer is also 80,000. It means what? If you are reducing our selling price, which means if you are reducing our selling price by 10%, I will have to sell entire my full capacity to achieve the same profit which we are earning today, 60,000 units. By selling 60,000 units. I hope it is clear. Okay, so let's move to the next part of the question, that is option 2. Under option 2, they are saying instead of compromising your selling price, let's try to increase your variable cost, that is dealer's margin, by 25%. Okay, so selling price will remain intact 30, variable cost, material cost will be 10, conversion cost will remain same 5. Now dealer's margin 3 plus 25%, it will become 3.75. So my variable cost total will change from 18 to 18.75, and then my contribution will be 30 minus 18.75. It will be 11.25. Now applying the formula for desired sales, which is desired profit plus fixed cost divided by contribution per unit, what will happen? 3,70,000 plus 3,50,000 desired profit plus desired fixed cost divided by revised contribution, which is 11.25. Solving this, we get 64,000. Now, what do you mean by this? Which means to under the second option, that is if I have to increase my variable cost by 25 paisa, I can say, because 3 rupees, no, 25, 75 paisa. If I increase my dealer's margin by 75 paisa, what will happen? They are saying you need to sell 64,000 units to earn the same profit which you have earned by selling 60,000 units. So, which means what? I just need to sell 64,000 units under option 2, which means I don't need to sell entire of my capacity. Now, we have to give the concluded remark also, because last part of the question is saying justify your recommendation. So, under option 1, we have to sell the entire capacity to earn the same profit which we are earning today. Under option 2, we just need to sell 64,000 units to earn the same profit which I earned today. So, which option is better? Quite logically, option 2 is better, because I just need to sell 64,000 units to earn the same profit. The remaining capacity, that is 80,000 minus 64,000, I can think about what? Selling something else also, right? So that way we need to conclude the answer. It's not enough just to find out the answer under the 2 option. We have to make suitable remarks also. So with this, we come to an end to the illustration. Going for the next illustration, they are saying a company is manufacturing shirts, and currently it is selling 24,000 shirts. They are given the details, cost structure and sales value. Sales price is given 40 per unit, variable cost is 25 per unit, fixed cost they are given as the breakup, totaling to it will come around 2,40,000, 1,20,000 plus 80 plus 40. Now, beautiful question. All the 4 conditions below under are independent situations. Without mixing all this, independently evaluating, they are asking us to find out certain data. First, they are asking us to find out the breaking point and margin of safety, both in units as well as in value. In second part of the question, they are asking if the company is planning to sell 20,000 shares, what could be the profit company would have been earning? Third part of the question is, if the company wants to ensure that it earns 15,000 profit, but selling commission will increase, selling commission will come into the picture, which is 3 per unit. If that is true, how many shirts I need to sell, giving due respect to the two conditions? That is, first I need to ensure the profit of 15,000. Also, I will have to face an increase in the variable cost by 3 rupees. Last part of the question they are asking, assuming that for the year 2022, the fixed cost comes to the picture 34,000 in the form of additional staff salary, and the price is selling price I can increase by 15%. then what should be the break-even point in this case in terms of units as well as in value? I hope the question is clear. Let's proceed with the answer. Yes. Let's first find out the break-even, first part of the question, that is break-even point and margin of safety both in units and value. So first, selling price, it is given how much? 40 rupees. Variable cost is 25. Contribution will be how much? 50. And then fixed cost, it is given totaling to 1,20,000 plus 80 plus 40. It will be 2,40,000. So break-even point formula to find out in units will be fixed cost divided by contribution per unit. So it is 2,40,000 divided by 15. It will give you break-even point in terms of unit as 16,000 units. Now straight away I can find out the break-even point in terms of value also. 16,000 into the selling price, which is 16,000 into 40 rupees, or you need to apply fixed cost by PV ratio formula. Here, since I have found out the units, I'm not going for that. Straight away, I'm calculating your breaking point in terms of value, which happens to be 6,40,000. I hope it is clear. Moving to the next part. Margin of safety. So already we have computed up to the contribution. Also, we have done fixed cost 2,40,000. Now, margin of safety I can find both in units and in value. Margin of safety units, the formula is actual sales units minus break-even sales unit. In terms of value, it will be margin of safety value is equal to actual sales minus break-even sales. Now, actual sales units is how much given the first line of the question 24,000, and the break-even point which currently we have found out is 16,000 units. So your margin of safety in terms of units is 8,000 units. In terms of value, if I have to find out, your answer will be what? 24,000 units is your actual sales. 24,000 into 40 selling price minus 16,000 into selling price, which is 40. It should give you the difference should give you the margin of safety in terms of value, which comes to 9,60,000 minus 6,40,000. Your answer is 3,20,000. So with this, the first part of the question is over. Next, if I'm selling 20,000 units, what is second part of the question we are answering? What will be the net profit? So selling price same, variable cost is same, 40 minus 25. The variable cost contribution is 50. Units sold in this case, what company is billing? 20,000 units. So 20,000 into 50, we need to find out your contribution. It will be 3 lakh. What about the fixed cost? It will be same, 2,40,000. So what is the profit? 3 lakh minus 2,40,000. Your answer is 60,000. Okay. Next, they are asking us to find, let's move to the third part of the question where they are asking to earn the 15,000 profit if the company also has to incur an additional sales commission of 3 rupees. How many units the company, how many shirts it has to sell? So here there is small change. We need to find the desired sales. So we know the desired profit plus fixed cost divided by contribution per unit. Here desired profit and fixed cost I have interchangeably I have written here. So only the question has changed. 2,40,000 is your fixed cost. 15,000 is your desired profit, which is given the question, divided by contribution. Now the earlier contribution is 15. Now what is happening in the third part of the question? They are saying there is an additional variable cost of 3 rupees. So what will happen to the contribution? From 15 it will fall down further. So 15 minus 3 it will be 12. So 12,55,000 divided by 12 gives me the number of units to be sold to earn the profit of 15,000, which is 21,250 units. So with this we have done the third part of the question too. Now let's discuss the last part of the question where they are saying there is an additional fixed cost of 34,000 rupees and the sales price can be increased by 15%. They are asking us to find out the revised break-even point. So my selling price will go up from 40 rupees, 40 plus 15%, it will be 46 rupees. My variable cost will remain intact, which is as mentioned the earlier variable cost, because all the situations are independent. Okay, so what is given the main part of the question? It is 25. We will maintain that. So 46 minus 25, it will be how much? 21. Now what about the fixed cost? We do have the earlier fixed cost plus additional of 34,000. So it will be 1,20,000 plus 80,000 plus 40,000 plus 34,000. It will come around to 2,75,000. Continuing further. Now break-even point in terms of units will be what? Fixed cost divided by contribution per unit. So 2,74,000 divided by 21, we will get 13,047 units. So now what about the break-even point in terms of value? I just need to multiply it by selling price, which is how much? 13,047 into 46, it will be 6,162. So with this, we come to the end of that question also. Let's move to the next part of the question. Here they mentioned that company is selling some product and the selling price is 50. Current its variable cost is 35. Fixed cost is 12 lakh. Now with the following data, given data, they are asked us to find out, considering all the independent cases. First part of the question they are asking, compute your PV ratio and break-even sales. Second, revised break-even sales if your variable cost further increased by 3 rupees. Next, if the company want to increase the profit by 2,40,000, then how much the sales has to be increased? They are not asking as a revised sales. How much increase? I can say incremental sales is what they are asking. Last part of the question is interesting. They're saying, what is the percentage increase or decrease in the sales quantity volume? Okay, so that to face all the three situations independently. What are they? First one, if my variable cost increases by 3 rupees, okay, how much my percentage of sales quantity should be increase or decrease? First part of the question. Second, they are asking, to ensuring the same amount of profit, and if my selling price is increasing by 10%, how much quantity of the sales in terms of percentage has to be increased or decreased? And last part of the question, again they are saying, ensuring the current profit you are earning, and assuming that your sales can be increased by 1,30,000, how much your administration expenses can be entertained to ensure that how much increase or decrease in sales quantity can be made. So let's start discussion about it one by one. First one, let's find out the PV ratio. The PV ratio will be contribution by sales into 100. So 50 minus 35 divided by 50 into 100. So your answer will be 30%. Next, let us find out the break-even point. Break-even point is fixed cost by PV ratio. Fixed cost is given 12 lakh. PV ratio we just computed. So 12 lakh divided by 30%, it will be, your break-even point will be 40 lakh rupees. Okay, so with this, the first part of the question is over. Let's move to the second part of the question. For that, what will happen in the second part of the question? My variable cost increases by 3. So what will happen? My contribution will change. Ultimately, my PV ratio will be affected. Hence, I need to find out my revised PV ratio. So revised PV ratio. See here, selling price will remain intact 50. My variable cost will increase from 35 to 35 plus 3, 38, and divided by sales into 100. So I will get my revised PV ratio. It is 24%. Moving further, now new break-even point will be, in this case, what will happen? Fixed cost divided by revised PV ratio. It is nothing but 12 lakh divided by 24%. So my revised break-even point will be 50 lakh. Going further to the third part of the question, to ensure that is, they are asking about incremental sales to ensure that incremental profit is by 2,40,000. So if I want to earn an additional profit of 2,40,000, how much additional sales I need to make? So I just apply the formula. That is, you need to consider increase in profit divided by PV ratio, which is 2,40,000 divided by my PV ratio. What is my current PV ratio? It is 30%. Please don't take PV ratio just now we computed. All the cases are independent. So earlier PV ratio, that is 50 minus 35, that is I think 15. So that's the same PV ratio which we have to take. So we get the answer of 4 lakh. Moving to the last part of the question, that is very, very interesting. Let's try to do it. Break-even quantity, currently it is how much? 40 lakh divided by selling price, which is 50. So I get my quantity, it is how much? 80,000 units for break-even point. Now revised break-even point will be what? My fixed cost is 12 lakh. Now they are saying my variable cost further increases by 3 rupees. So what will happen? 35 plus 3, 38. So 50 minus 38, my revised contribution. So 12 lakh divided by 12 rupees. So I will have my new break-even quantity as 1 lakh units. Now, how much percentage increase in quantity has to be made? So my earlier break-even point was 80. The difference is how much? 20,000 divided by 80,000 earlier into 100. So I get my percentage increase of sales, which is 25%. Moving further, the second sublimit of the question. So first sublimit of the question A is over. Second, let's proceed. They are asking to ensure this current profit, and by increasing the selling price, what is the impact on my quantity? Let's move on to that. Yes. Now see here, new breaking quantity in this case will be how much? 12 lakh divided by 50 plus 10 percentage. Now how I am calculating this? My selling price is increased, right? 50 plus 10 50 plus 10 percentage, which is your revised selling price, minus variable cost, which is 35. So 50 plus 10 percentage minus 35, I will get my revised contribution. So 12 lakh divided by that. So further writing, it will be 20. So 12 lakh by 20, I will get my revised break-even quantity as 60,000 unit. Now, how much quantity has increased? So earlier the break-even point was 80,000. Now the break-even point is 60,000 only. So it has decreased. So 80,000 minus 60,000 divided by 80,000 into 100. So decrease in sales volume is 25%. See, I have made a mistake there. Percentage increase or decrease in quantity I should have written, but I forgot to write that. So the correct is decrease in the sales volume is 25%. Okay. Now, the last part of the question, that is quantum of additional advertisement expenditure permissible to increase the sales by 1,30,000 without affecting the existing profit volume. Here, I believe there is a small mistake. That is the fourth question should have only part A and part B. The quantum of advertisement expenditure permissible to increase the sales by 1,30,000 without affecting the existing sale profit should be the fifth part of the question. Why I'm saying so? By looking at the workbook answer, it seems so. So instead of being the subpart C of point number 4, it should have been separate independent question as part 5. I hope it is clear. Now let's start finding out that answer. Now see here, if my sales increase by 1,30,000, what is my additional revenue which I get? That is additional contribution I will get. It is nothing but 1,30,000 additional sales into my PV ratio, which is 30%. So how much I will get? 1,30,000 into 30%. It will gives me 39,000 rupees. Now, which means the sales revenue increases by 39,000. That is a contribution increased by 39,000. My profit would have also increased by 39,000. Now they are asking how much additional advertisement expenditure I can incur, but I don't want to decrease my profit. Whatever the current level of profit which I earned, I want to earn the same thing. So logic is very simple. You are getting additional contribution of 39,000. So that is a maximum amount you can sell so that you ensure the same amount of profit. So what is our final conclusion? This additional contribution which you are receiving from the sale of additional 1,30,000 sales value of 1,30,000 is the maximum amount which you can spend in the name of advertisement. Now, if you note here in the workbook also, okay, if we are considering this as a part C of this point number 4, there should be the answer shall be in the percentage increase or decrease, and it doesn't make sense also. So that is the reason why I said it should be a separate question. After fourth, it should be the fifth point, independent case. I think that is what they were trying to convey through this. However, I think there should have been a printing mistake. So with this question is over. Now, let's move on to the last part of the question. They're saying if the margin of safety is 40% of sales, they are asking us to find out the fixed cost when the profit is 20,000. It is interestingly done in the workbook. However, I have done a little bit more logical way. I have tried to handle it. Let's try to do that. I know that margin of safety is equal to profit by PV ratio. Okay. Now, given the question, they have mentioned 40% as margin of safety and the profit is also given as 20,000. But they are not given as a PV ratio. Now, I also can write like this. PV ratio in this case will be how much? 20,000 divided by margin of safety sales. 20,000 divided by margin of safety sales, not percentage. So I can say margin of safety sales into PV ratio, what I will get? Contribution, isn't it? So can I write like this? Contribution is equal to 20,000 divided by margin of safety percentage. If I can write like this, things are much easier. So it will be contribution is equal to 20,000 divided by 40%. So the contribution I will arrive at is 50,000. Now contribution is equal to fixed cost plus profit. 50,000 is equal to fixed cost plus 20,000. Now 50,000 minus 20,000 is equal to your fixed cost. So hence your fixed cost is 30,000. So with this, we have come to the conclusion of your workbook regarding marginal costing chapter, which has been added by the institute. Thank you.